Welcome back to the channel, everyone. Today I want to talk about why the shorts have stopped shorting and why the shares available to borrow are currently so high. And I also want to talk about another instance of the buy button being turned off. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Stonks Batman tweeted again showing the shares available to borrow and how they've changed between October 7th and December 7th, obviously for AMC. So as you can see, this data comes directly from iBorrowDesk. Obviously, the shares available to short have been increasing significantly, obviously from the lows that we saw between July and October, and they've been increasing significantly every single day recently. Now, the last time we saw this kind of volume of shares available to borrow was back in early January. The 11th of January had 6.3 million shares, the 13th of January had 6.6 million shares, the 18th of January had a lot as well, and the 21st of January had a lot as well. Now we know what happened a few days after between the 26th and the 28th of January. AMC and GameStop ran up and the buy button was turned off, squashing the chance at the January short squeeze. Now you may say, Tom, well, the shares available to borrow back in May and June weren't really that high, so surely that means that shares available to borrow isn't really a good measure, right? Because obviously AMC squeezed way hard, or AMC ran up way harder back in June than it did in January. But that's not technically the case. Back in January, AMC ran from $2 to $20, so a 10 times increase. Back in June, AMC ran from $8.01 to around $70, so less than a 10 times increase. And the January run-up was very much capped by the buy button being turned off. If the buy button wasn't turned off, then AMC would have ran much, much higher and also would have caused the January short squeeze. Now, I think the shares available to borrow being so high is a very telling sign. Firstly, it tells us that the hedgies are currently too scared to short AMC anymore. That's why they're leaving so many shares on the table and not snapping them up every single day. The reason why the hedgies are scared to short AMC anymore is because they know what's around the corner for AMC and also for the wider market. They know the wider market is going to crash and they know that that crash is going to cause AMC to squeeze. But on top of that, it's also telling us that the hedgies don't actually have enough money to add to their short positions even more. And that's why they've stopped shorting or stopped adding to their short positions. Now, we know that the AMC stock is still being manipulated. The hedgies are passing the shares that they currently own between each other, ladder attacking the price of AMC down. But what they're not doing is adding to their short positions because they can't afford to anymore. If you cast your mind back to the last time you watched The Big Short, what Mike Burry was doing was accumulating positions in credit default swaps. But what he didn't do was use 100% of the firm's capital on those credit default swaps. He kept some money tucked aside in order to pay those monthly premiums. Mike Burry's Big Short had transaction costs involved. He had to pay those big upfront fees, and he also had to pay monthly maintenance fees for those credit default swap premiums. So the hedgies are currently in a similar boat. The hedgies have this borrowing fee, which at the moment is very low at only 1%. But on top of that, the hedgies also have those one-off fees to pay every single time they reset their fail to delivers. Each time the hedgies want to pass their fail to delivers to another institution, or each time they want to engage in a ladder attack with another institution, they have to pay a one-off fee to obviously cover off the risk for that other institution. Therefore, the hedgies don't have enough money to add more shares or more shorts to their overall short position. They only have enough cash to reset their fail to delivers for a little while longer. Just how much longer they have, I don't really know, but it is showing that the hedgies have now entered phase 2 of their plan. They've stopped accumulating shorts and stopped doubling down and tripling down and quadrupling down on their short position, and they can now only afford to pay those fees. And ultimately, this means that we are winning. If they can't afford to add to their short position anymore, and they can only just about afford to pay these fees, it means that we are winning because it's not costing us anything to hold our shares. Moomoo are currently giving away an iPhone 13 Pro every single day until Christmas, on top of a number of other goodies like an Oculus Quest 2, and also those 5 free stocks valued at $3,500 each. To be in with a chance of winning the iPhone 13 Pro every single day this month, all you need to do is open a Moomoo account and deposit $100. To get those 5 free shares valued up to $17,500 in total, all you need to do is open a Moomoo account to get your first free stock, make your first deposit of any amount, even if it's only a single dollar, to get that second free stock, and deposit at least $2,000 to get the final 3 remaining free stocks. Moomoo is also a brilliant investing platform. They've got free real-time level 2 market data, they've got advanced charting tools, they've got 24/7 real-time financial news so that you don't miss an important headline, and they've also got a global investing community so that you can get some new stock ideas. Now this is basically Citadel's profit chart for 2020 and 2021. Obviously, in 2020, Citadel were making a lot of money on their AMC short position. But since January of 2021, Citadel have been taking on heavy losses. Obviously, taking on a large loss in January and taking on an even larger loss back in June. Yes, they have now recuperated some of this loss as AMC is only trading for around $29, but obviously they're still down significantly from their all-time highs back at the start of January when AMC was only trading for around $2 a share. If you didn't actually know what this chart is showing, it's an inverse logarithmic chart of AMC. Obviously, the AMC price increased from around $2 to around $70, so it's effectively the AMC chart, but flipped upside down. And this is why Citadel have restricted their withdrawals, because they know they've taken on such heavy losses and they don't want their clients to pull their money out. And on top of this, not only are Citadel restricting their clients' withdrawals, but they're basically stopping them from ever investing in Citadel again if they do pull their money out. Tofik tweeted saying Citadel funds are now closed for new investors. They say if you withdraw your investment, you will not be able to reinvest in Citadel ever again. Things are getting desperate. So not only is Citadel trying to restrict their withdrawals or charge fees for their withdrawals, but they're basically trying to scare their investors by saying if you do withdraw, you can never invest with us again. This is just another tactic that Citadel are trying to use and trying to employ to scare their investors to stop them withdrawing so that Citadel don't have to cover their AMC short positions right now. But as a message to Citadel investors, if you're mad that they took away the withdraw button, good. We know the feeling. Come and join us and become an ape. Obviously, we know what it feels like to have the buy button taken away, so if those investors are getting mad that they've had the withdraw button taken away, maybe they should consider changing sides. Now, interestingly, we have another instance of another stockbroker turning off the buy button. This guy got an email from uStockTrade. Due to operational circumstances, uStockTrade has placed some restrictions on customer activity, such as not accepting buy orders or deposits. Sell orders and withdrawals have not been restricted. Now, this is very interesting. Obviously, it doesn't specifically mention AMC by name. I think it's just on some specific stocks. Obviously, uStockTrade are seeing what's happening in the current market climate, and they don't want to fall foul of liquidity issues like what happened with Robinhood. Because trading is performed on a T+2 basis, Robinhood were effectively selling shares in GameStop to their customer at say $40 a share, but Robinhood were having to go out there into the market 2 days later and buy those shares for $200, $300, $400 a share. This obviously caused massive liquidity issues for Robinhood, and they had a massive margin call from the DTCC, which they obviously struggled to meet. So I think a number of other brokers like uStockTrade are seeing this and they're trying to prevent massive liquidity issues. Therefore, they're stopping customers from making deposits and stopping new customers from joining, and also restricting buy orders. That way, uStockTrade will have a lot less orders to fulfill and therefore won't have those same liquidity problems when the market crashes and when AMC squeezes. Also, as a quick announcement, the AMC website is now fixed for international users. Therefore, you can sign up to AMC Investor Connect without using a VPN. Therefore, you can now register for your AMC NFT if you're overseas without having to use a VPN or go through a big faff. I currently have my VPN deactivated and usually I could never get onto the AMC website, but now it's fixed, I can. Again, all I have to do is scroll to the bottom, fill in my email address and select my country of residence and send off the email. Now on top of this, China are now reacting to Evergrande's imminent collapse and they're suggesting that the economy is a lot weaker than what's been reported. China's central bank expanded the supply of money for lending on Monday as Beijing tried to reassure its public and investors that the economy can be protected if a troubled real estate developer's $310 billion mountain of debt collapses. Now, supposedly the Communist Party can prevent a credit crunch, but it wants to avoid sending the wrong signal by bailing out Evergrande. Therefore, the People's Bank of China has released $190 billion for lending by reducing the amount of money that banks must hold in reserve. But on top of this, China's local governments have hidden debt estimated at nearly $8 trillion or nearly half of China's entire GDP. By comparison, local debt in the US is estimated at only $2 trillion at the end of 2020, and therefore, because China are actually hiding so much debt, the economy is in a much weaker position than they're actually presenting. The Chinese media are already announcing that Evergrande has officially defaulted, so when the paperwork goes through, I think it's going to be a lot more of a problem for China than they're initially expecting or initially announcing. I think this is not only going to impact Chinese property developers, but also Chinese financial institutions. And I do think that that's obviously going to spread over into the US, into the UK, into Europe, and everywhere else in the world as well. Now, finally, I wanted to touch a little bit on negative beta or negative beta. Al from Boston tweeted saying December is going to be a really bloody month for the market. If the squeeze happens via the market crash, then it's already started. He said, I'm a little bit concerned about AMC and its negative beta or beta, and he's keeping an eye on the S&P 500. If it starts to rapidly decline like it was earlier last week, hold on and strap in. But Corey says, as I've said it before, look at negative beta stocks during past market crashes. The market drops, then a few days or weeks later, negative beta stocks shot up while the rest stayed down. Now, the reason why it takes a few days or a few weeks before squeezes start happening is because when the market starts to crash, these hedgies and institutions are going to do anything they can in order to get more cash to add into their positions. These hedgies and institutions are going to start dumping crypto, they're going to start dumping gold, they're going to start dumping bonds, pretty much doing anything they can to survive in the stock market without being liquidated. Now, they may be able to survive for a few more days, they may be able to survive for a week or two more, and then they are going to get liquidated. Now, again, that liquidation process isn't instant. It doesn't take 2 minutes. It doesn't take half an hour. It may even take a few more days after that to liquidate an entire hedge fund. And therefore, if the market is crashing now and when it starts to crash more, it may take a few more days after that crash or a few more weeks maybe after that crash before AMC and GameStop start to squeeze. Guys, be sure to let me know down in the comments below why you think the shorts have stopped shorting and why the shorts have stopped adding to their short positions. And guys, if you want to stay up to date with all of my new stock and crypto picks, or if you just want some help with AMC and GameStop, be sure to check out the Patreon and the private Discord, linked in the description below, and become part of the team. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!